Okay, so in a premium market, you're on basically by this time you should understand that the premium market is taking the concept of the market range created by an impulse swing when the market is in a downtrend. You know that institutions sell at premiums. So when the market is in a premium, the institutions will sell. The institutions will sell. Institutions will not sell price when it is in a discount of the range. Institutions will sell when it is back in a premium so they can collect more for their goods. So let's look at this downtrending market, for example. The market starts this impulse swing off at this high of 401.49 and we begin to decline. We see down close, down close, down close, down close, down close, down close. We see two, four, six down close candles preceded by one up close that doesn't even close above the previous down close, and then we see another four down close candles before an up close again. Okay, so let's try to plot this move now, and we'll take from that high in the premium and to this low. Okay, and what do you see here? In this situation, price rallied, but price could not return into the equilibrium of that imbalance, nor could it return to the premium of that imbalance. Price totally fell and collapsed. Cool. Now, can we now plot this high to this down move? That will be the next impulse swing. On this time frame we're observing. If we're observing a time frame lower than this time frame, then yes, you would see that there were smaller swings. But on this time frame, we want to plot this high of this candle, 161.0, all the way to this low. And you can see that price is unable to reach a premium. So you can see that there's a lot of liquidity that's left on tap because you know that institutions will be have orders ready at equilibrium and at a premium, but price is consistently failing to be delivered at the premium. When you consider this impulse swing from this high all the way to this low at 11.93, when price rallies and sends this impulse swing, bullish impulse swing upwards, where does it go? It goes into the premium of that range. It goes into the premium of that range. Not only does it go into the premium of that range, but it goes into the optimal trade entry point at 0.625. And then what do you see? You see sellers step into the market and ultimately make this downwards drop. You know? So my people, this is price action at its finest. And when you look at this chart, you can also observe that this entire swing from this high to this low, seeing that it is a downwards move, can definitely be plotted out on a range. Let me move these text here. So when you plot this low, when you plot this high to this low, this high of 404.13 to this low of 11.87, you can see that this reaction that we got here was also at the 50% of that range. And this future reaction that we have now seen here It's also price reacting away from the premium of that range.